Axel Merk with us to get us started on this Fed Day surveillance midday. Axel, great to have you with us.
Hi, Tom.
The dollar. Secretary Geithner said yesterday at the Council on Foreign Relations, we have some sense of a strong dollar policy. Where did our strong dollar policy go?
Oh, it's been gone a long time ago. I think you have to go back to Rubin. And you notice, in the past at least, the dollar would have a rally for a few minutes. This time, not even that happened. The problem is that words need to be backed by actions, and that's pretty much also the theme today at the Fed. Bernanke can do all the talking he wants, but it's the actions that count. And so that's the market will be focused on that, whether there's actually going to be a change in actions, and I don't think there's going to be anything of that sort.
Dreaded first chart to bring up the decline in the dollar here. Call it the litmus paper of the system. This is real. Trade weighted broad. This includes China. Down it goes. You can see that move from 02, roughly a little bit of a crisis recovery, but then down we go. Axel Merk, you run portfolios for a strong dollar. Do you do that because you see little chance it will actually get the policies that would lead to a strong dollar?
Yeah, it's back in 2004 already. We decided we got to do something about this and not just talk about it. And so this is a very long-term theme. It's just the dynamics favor a weaker dollar. Italy had it for decades, trying to inflate its way out of its problems. It's just here it's intensifying. And in the absence of a political compromise on entitlements, for example, what easier way is there than to just normally pay people what you promise them? It's just the purchasing power of that is not worth quite as much as it was before. And now you have policymakers, in particular Bernanke, who has argued that going off the gold standard during the Great Depression helped the U.S. recover from the Great Depression, who is firmly embracing the dollar as a monetary policy tool, and who needs to have a weaker dollar, and who thinks and has said so that a weaker dollar is not inflationary.
We just made up this chart, folks. Thanks to our chart team for that. Brent crude right now 125.06, and you can see the short-term move there up. Brent crude from 44.56. What is that number? That number is the price of Brent crude the day that the Fed went to 0.25%, December 16th of 2008. Axel Merk, is the recent surge from 80 to 125 in Brent crude, is it due to QE2?
By all means, by all means. Bernanke can't say asset prices are up, but inflation is not up in commodities. And indeed, in 2003, Bernanke held a speech derailing the monetary policies of the late 60s, early 70s, saying that commodity inflation was caused by bad monetary policy. He's doing the same thing all over again, and he's not realizing that the dynamics are such that consumers would like to downsize. Therefore, all the money he's throwing at the economy doesn't stick and goes where you have the greatest monetary sensitivity. That's precious metals, and it also includes crude.
They're all the correlation here, the interdependency. Here's gold, folks. I love this chart. It's an emotional chart this Fed Day. Real gold, inflation-adjusted gold. This time is different. Thank you, Reinhardt and Rogoff. Back to 1960, you can see the fixed price of gold, and then Nixon did that little bump there, and then up we went. Every taxi cab driver talking about gold in 1980. Axel, they are again. What does gold signal to you at 1,500, approaching where we were price adjusted in 1980?
Well, it's a scorecard of the Fed policy. And at this stage, many people talk about it, but there are many people who still don't invest in gold. We don't have people line up at the corner. And we don't, well, of course, we have a lot of money in the gold trust these days. But still, more people are talking. Whenever gold goes up, people talk about we have another top. The key difference between gold and other currencies is that it's less liquid. As such, when there's money piling into gold, the moves are far greater. We have not seen the sort of panic buying that we saw in the early 80s. At this stage, it's a purely a reflection of the Fed policy. And mind you, the end of QE2 is not an exit. The banking system remains awash in money. Excess reserves are huge, and that means interest rates remain negative. We keep that money in the economy. The Fed is the only central bank in the world that's continuing to ease, aside from Japan, just a tad right now with the rebuilding. But everybody else is tightening, and not a surprise. Gold is going up and the dollar is going down.
Axel, thank you so much for getting us started on this Fed Day. Axel Merk, folks, Merk Investments.